Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit the ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. Well guys, every time when you think that on the market absolutely clear situation in the market behaves absolutely logical, for us always something appears that gives you the headache and makes the situation more complex than it was just one day ago. So you can see on the euro currency we have this issue, and that issue is bullish stop grabber pattern that has been formed on the market yesterday. So although we see that overall price action in recent time has the bearish sentiment, that pattern in fact is the bullish. It's not drastically bullish because its target, I suppose, stands right here. That's the most recent high on the daily time frame. But still, it suggests some further action to the upside in the nearest future. As other patterns, stop grabber pattern also could fail, but appearing of that pattern here makes us not nervous, and it's as we could say, it's a black spot in our white bearish analysis. I think that in general the overall price action that was previously is stronger than this pattern because the momentum of the market is bearish and it stands in favor of deeper retracement. This is just the pattern, just the price action relation to some indicator, but that is the market itself. That's why I think that setup of the downward retracement is stronger than the bullish stop grabber pattern. Besides, we have double repulse sale and this bearish engulfing failure, breakout of the flag, and so on that we have discussed previously, against just single bullish pattern that suggests some deep higher retracement to the upside. That's why it makes the decision making and the analysis of the current situation is a bit more sophisticated and adds a lot of nuances to understanding and trading the current situation on the intraday charts, because there could be some upward surprises that will be not quite desirable by the bears. All other stands the same on the daily time frame. So if we exclude this pattern, our target still is around 129.29.20 area. It's deep retracement of that swing up. That also could put the starting point to the deeper move is the ABCD pattern to the upside, right to the around 132.50 area. That is our medium-term expectation that this could happen currently. Well, on the intraday charts, on the 4-hour time frame, what we see? That's the head and shoulders pattern that we have discussed, and we say that it's a bit too soon turn off to the downside because, as you can see, the left shoulder stands with the longer time to form than right shoulder, and from that standpoint this head and shoulders looks ugly. But you can see market a bit extended the time of the formation of this shoulder to the right in the time. As you can see, it stands now a bit longer. So maybe if market will trigger the stop grabber and market will show some another splash to the upside, this shoulder will be even more longer, and from that standpoint the head and shoulders pattern could reach some harmony, time harmony. Well, after that market could continue move down. Also take a look that market still stands on the confluence supports around 13.15 area. Test it once, second test, small pullback. That is the low that's very significant for us because that's the low of the stop grabber. If market would take it out, then stop grabber will fail and we could count on the downward continuation to the 129.20 area. That's 618 support from this A, B, C top pattern that we have discussed, ABC from the head and shoulders, that makes an agreement with this level. That's our major analysis of the euro currency. But since stop grabber adds some difficulty to current situation, let's take a look at the hourly time frame to understand what shape it could take in the nearest future. Actually, we have two butterflies that could work on the hourly time frame. The yellow butterfly, that is, could be treated also as the crab pattern, because you can see the inside swings quite low, and if market will reach 127 extension, it will be double or even triple of this move. That is typical for the crab pattern. The target of this butterfly stands for 127 extension, stands very close to the weekly pivot resistance 1. It's 131.72. Target of the butterfly is around 131.58, 131.60 area. It's right here. The target of the stop grabber pattern, minimum target, is that high. Market suggests taking out of this high at minimum. So the nearest target to this high is the target of the stop grabber of the butterfly pattern. That probably, if stop grabber will start to work, then probably that market should reach this area. The one important moment here is that even reaching of that area will not absolutely destroy the possibility of downward action. So some ABCD pattern to the downside. Market still could show the downward action. That's the first scenario. The second scenario is downward butterfly, based also on the head and shoulders pattern, because we know that very often the butterflies become the part of the head and shoulders patterns. And you can see that 1618 extension of this blue butterfly stands right at the 129.20 area as the target of this ABCD pattern stands, as the fib support, major fib support on the daily time frame stands. So you can see this is very interesting, if you could say that, agreement and cancellation of different types of targets, different types of the extensions. ABCD extension, this retracement extension, and the support area itself. Well, since I'm just would like to share with my feelings, it's not based on some pattern or some indicator, but if we'll take into consideration the downward scenario and potential upward scenario, as I said, I think that bearish scenario is a bit more strong, because first of all we have more patterns on the bearish side, and what's more significant, that we have the bearish market momentum. That, in fact, the market itself that stands in the favor of the downward continuation. On the opposite side, of the bullish side, we have only the bullish stop grabber pattern that also could fail. From that standpoint, to save you from the potential upward action, you could try to apply the stop entry order. So if market, for instance, will take out of these lows, it will simultaneously erase the butterfly to the upside. And that could be the signal to enter short. So if you will place your stop somewhere below the weekly pivot point, weekly pivot support 1, somewhere in this area, stop entry order, then probably you could try to enter short with the breakout of this level, destroying of this butterfly, destroying of the stop grabber pattern on the daily time frame, if you of course do not have the position already. If you have your position on the short side of the market, it would suggest around the 50% resistance, I beg your pardon, 50% resistance of that swing. Then probably you could try to tighten your stop, just tighten your stop, if suddenly this move to the upside will happen. So that's major conclusion currently. So I do not want to rely much on this stop grabber pattern due to the reasons that I have discussed, because I think that the bearish sentiment and bearish momentum in the market is rather strong. We have a lot of different patterns that points on the possible downward continuation, but at the same time I do not want to take unreasonable risk of the possible upward action. So since I have the position at the 50% resistance, I place the stop to the break even, and if you do not have, put attention to this low that I marked by the red circle. That is the invalidation point of this upward butterfly or crab pattern. So if market will take it out, then it will erase as the stop grabber, as the butterfly sell. This will probably could let you to enter short with some applying of the stop entry order, not the limit, but stop entry order at the breakout of this area and moving below the weekly pivot support 1. That's the major idea. At least currently I do not see any other possible solutions to this bit complex situation. So maybe you will find something else. you could share with your thoughts on our forum. So we'll be very appreciative of that. So let's see how it will turn, and keep an eye on this current situation. It's rather interesting.